Good with y'all, man? Back with another video, back to back. You know what I'm saying? I told y'all I was gonna try to be more consistent with the reviews, so this is me trying to be a man of my word. You know what I'm saying? So today, February 11th, 2026, we're just gonna go over real quick the morning session, what happened, how I knew what was gonna happen, and the things that led up to me taking the trade that I did today. Price didn't really do too much from the review that I did yesterday. If you missed the review that I did yesterday, I explained most of the annotations you guys see on the screen right now. The big two most important ones was the daily void you guys see here at the top and at the bottom. I was explaining how I knew that price was looking to fill in these voids before it started making this definitive move, and obviously that happened. So here, this was yesterday's price action. I was explaining how I wanted to see price reject from this top daily void into the bottom one. That did happen. However, that happened later on in the London session. After our target got hit, notice how price began to retrace immediately right after. Those are signs that you are picking the right PD arrays for price to react off of. This is how you're able to call tops and bottoms in the market. So just understanding imbalance and liquidity, it's going to help a lot with your trading in general. Here, I'm just giving you guys a more detailed breakdown on the same price action. So you can see it's the same levels. We got yesterday's high. And then here we had news at 8:30. When the news embargo got lifted, you can see how price immediately just shot straight up. Ended up taking yesterday's high. So our buy side liquidity was taken out. After buy side liquidity was taken out, you can see it eventually ran over. Some people may be confused as to why it sold off and it did not continue to keep pushing. And I actually have the explanation for you guys here. So the chart that you guys are looking at right now is the exact same price action as the previous slide. You guys see it's the exact same thing, but it looks a little different. Now, why, you might ask? That's because this price action is showing regular trading hours. What is regular trading hours and how do you access it? Regular trading hours is just the price action from 9:30 all the way to end of day, right? So this excludes Asia, this excludes London. You're gonna see a lot of times this is actually very useful. The way that you are able to access it is by going down on the top right of your trading view, and where you see ETH right there next to the timestamp, you'll see when you click on it, there's going to be an option that says regular trading hours. The reason why this is important is because there is a lot of gaps or a lot of imbalance that can be left after a large run that price is going to look to fill, typically within the following New York session. So what do I mean by that? If I go back, you guys can see during London, price came all the way from about 150 all the way up here to about 450, right? We'll just call it 450. That's a 300-point move. That is a very large trading range from London all the way to the start of New York. So understanding that, whenever I have large ranges like that in London, there's two things I can expect. Either one, it's most likely going to be choppy in New York, or two, there's going to be a very deep or a very large imbalance that's going to look to get filled that I can spot on the regular trading hours, which is shown right here. So if you guys kind of pause your screen, what is the obvious void that you eyes draw to? If it's not obvious, you guys can see it right here. The large gap from this candle all the way to this candle. So like I said, this right here is the end of yesterday's trading, and then this right here is the start of 9:30. So now if I were to break it down even more, we're now on the 1 minute. So this is the exact same price action. We're still on regular trading hours. We just broke it down now to a 1 minute time frame. So you can see here, I had regular trading high labeled right here, regular trading hours low, right? Look how fat of a range this is. Whenever you see large ranges like this, typically the following New York session is gonna act like a vacuum into these voids. So I talk about a lot how price is attracted to either imbalance or liquidity. This is a very hefty imbalance. So understanding that when price ran up above this high, your first thought needs to be thinking, okay, liquidity typically means reversal. So if it was going to reverse, what imbalance or liquidity would it target? This morning's regular trading hour gap. Very important. So now the chart that you guys are looking at now is the exact same price action. It's just back on extended trading hours, or the chart how we would normally see it. So you can see the lines are still here. We still have our regular trading hour high. in our regular trading hours low. It's just being brought over all the way from the back. So I also added 2 more lines. I added our midnight open and also our 8:30 open. So the reason why this is important is because at 9:30, which is this candle right here, not only did it take out buy side liquidity, right? So this black line right here, buy side liquidity from back here. And it also did it again right at 9:30, right? But we are also in a deep premium. Now, what do I mean by that? If you see my other videos, you hear me talk about how ICT is always referring to premium and discount. It's one of the most crucial things you can learn in your trading. That will change a lot. Whenever price is above both the midnight open and the 8:30 open, price is in a very, very, very high premium. When price is in a very high premium, it is highly probable that price is going to start seeking discounted prices. Now, the next question is to ask yourself, okay, well, if price is going to look for discounted prices, how do I find that, or how do I define that? If I were to put a fib onto this price action that you guys see right here, and I'm kind of going to clean up some of the lines. So all I did was just put a fib right here from the lowest low of this range up to the highest high of this range. You can see here we have 25%, 50%, and then the lower quadrant, or the lower 25%. Anything 50% or higher, so 50% or higher is going to be considered premium. Anything 50% or lower is going to be considered discount. So if I'm in a deep premium and I know price is looking to seek discounted prices, the next thing that you can do is find some type of PD array, some type of imbalance, or some type of liquidity resting below 50% that price is most likely going to target. So again, I'm going to give you guys a chance to pause the video, kind of find it for yourself. By pausing the video and finding it yourself before I tell you, it's going to help build your skill set as well as your confidence. So going forward, when you start trading on your own or when you're back testing, your eyes are naturally going to be drawn to these PD arrays. Now that you guys have had a chance to pause the video, if you did, these are the PD arrays that you could have targeted from the sell side. So you can see here, we have an imbalance right here at 8:30 when the news embargo lifted, as well as these relative equal lows. Now something else to keep in mind too, these relative equal lows or the sell side liquidity was also our regular trading hours low. So you can see how everything is lining up perfect. Now all that's left to do is just to wait for our setup so that we can get into the trade. Now that we understand the overall narrative of this morning's session, it's all about finding your setup. So here on the next slide, I'm highlighting different points where you could have got in. For those who studied ICT's 2022 mentorship, it happens so much. Now, just because you don't have a fair value gap to trade into as your entry point does not mean you cannot take a trade. ICT teaches a lot of other PD arrays that you can use in order to still enter in a trade idea. Something that I really want to start using more often in my own trading is the breaker block. So price came up, again, liquidated, buy side liquidity. We had our market shift right here. So at this point, this is giving you confirmation you can start expecting or anticipating lower prices. Price consolidates a little bit, trades back up into this breaker block, and then immediately turns over and sells off directly into our imbalance, blows right past it, right here down into our relative equal lows. It eventually ran down into our other daily imbalance. However, you don't need to catch all of this to have a profitable day. Just from the bottom of this breaker block down to even the top of this imbalance was already 150 points, right? So if you look over here, it's around 425-ish, 420, all the way down here to about 395, right? Somewhere around there, about 390, 395-ish. So that right there is over 100 points. That's more than enough, especially if you're trading some type of prop firm. Even if you are trading your own capital, that's still very, very good. Even if you would have took it down to these relative equal lows right here, this would have been roughly like around 180, almost 200 points. So you can really make some good bread doing this. And there's really a lot of confidence that you can get just by understanding reasons why you're taking a trade. For example, I don't know about y'all, but I listen to rap and like hip hop. So I love like Young Thug, Gunna, all of them people, right? If you're familiar with those people, they just got hit with a RICO case, right? They had YSL on a chopping block because they was trying to call them a gang. A RICO was when the FBI come down on you mad hard and they just got evidence after evidence after evidence after evidence why they believe that you're guilty. So if you beat a RICO case, you like that because they let you stack so many reasons why they need to bring you in before they actually hit you with that RICO case. It's the same thing with Nas. So anytime you're day trading, whether it's this, gold, silver, Bitcoin, it really doesn't matter. You want to have reasons why you're doing what you're doing. You don't want to just pop a trade just for the hell of it. That's how you blow accounts. That's how you get lucky. But if you're able to stack reasons as to why I'm doing what I'm doing, you'll be more confident in your trades. You'll even be more confident in holding your trades longer. You'll also be more confident of understanding, okay, I'm wrong. It's time for me to get out and reevaluate. Little things like this tied in with good risk management, patience, and discipline is really going to give you longevity in this. The more you practice, the more breakdowns that you do on your own, you're going to see how a lot of these things repeat day in and day out. It may seem a little bit more choppier in the moment, but once you take a step back and you look at it for what it actually is, you're going to recognize that we're making this a lot harder than it needs to be. Here are my executions right here. I actually ended up getting taken out in profit. Part of the reason is because I realized the breaker block later after I had already been taken out. If I would have seen that earlier, I would have re-entered the trade off of this breaker block. However, that didn't happen. So going forward, I know they anticipated a little bit more, but I still had the trade idea right. And I just wanted to show you guys how you guys are able to do this for yourself. So obviously I'm not doing anything special. I'm not doing anything crazy. I'm literally just utilizing the evidence that's being brought to me. And then off of that, you make a logical conclusion. So I'm not going to talk y'all head off. Subscribe, like the video, share it with your homies. Comment down below what other forms of content that will be helpful for you guys. I'm going to keep pumping out these videos just because they help me. But most importantly, from the feedback I've gotten, apparently it's helping you guys as well. So if you guys have any questions, follow me on Instagram. You can just shoot me a DM. I'm on Discord sometimes, so I do like live trades over there with my friends for free. I'm not charging anybody at the moment for that. So if you want to hop in, just click the link down below. And then, shoot, that's really it, man. You know what I'm saying? But yeah, man, that's really it. Catch you on the next video.